Hello everybody, welcome to Friday. The S&P 500 was up today. We were up 1.3% and not a full recovery obviously of the losses that happened yesterday, but a good sign. We actually opened up quite high, went to negative and then bounced back up, which is another good sign also. There's some buying that's happening. All of this is happening around the 200-day moving average, and again, that's an important indicator for a lot of different people out there. So I think they see that as a buying opportunity when it comes down to the 200-day moving average. And you'll often see the market drop off of that. It did hit it pretty hard yesterday, hit it again today, and so I suspect that it might actually get through the 200-day moving average and get down into the top of that range. And then that might allow us to then start to regain again. I actually find these types of downturns to be fairly healthy. The market made 44% in a 2.5 month period in this bounce. And you have to have some type of pullback. And I've mentioned this before, it's very important, where you end up with sort of a feeding frenzy where it gets cheap enough and people say, well, I missed out on the last time that it made a big move and I'm going to buy this time because I want to get back into the market. And so I think things are still okay. We'll have to wait and see. There's some concerns about the virus coming back. There's some concerns obviously about the economy, and those are legitimate. But there's an awful lot of cash flow that has come in from the sides, and there's trillions and trillions of dollars sitting in money markets that could come back into the stock market and give us an additional boost. Might come down a little bit further before that happens. We'll find out, early next week. But that's where we're at the moment. I want to thank everybody very much for listening, and I look forward to talking to you again on Monday. Thank you.